Hi, everyone.
Yeah.
Soltu Nuvei, Mike. The vibe was like he's going to start dancing and shouting BitConnect, but, you know, we'll put that aside. So hi, everyone. Super excited to moderate this panel. Know these two guys for a very long time. New acquaintances as well. You want to start with introductions, like proper introductions? Bill?
Sure. Yeah. My name's Bill Barhydt. I'm the founder and CEO at Abra. I've been in tech, investing, capital markets, crypto now altogether probably for about 30 years. Abra's a well-known, popular crypto banking service, operates in well over 100 countries, managing 10 figures now of assets. We provide trading, high-yield accounts, as well as lending for both retail and institutions. And we also run an institutional business providing the same services as well.
Itamar?
Itamar, co-founder of Argent. I'm based here in London. And at Argent, we started a few years ago realizing people in that owning crypto was actually a very stressful experience, that you could wake up any morning with all your funds wiped from your wallet. And so we really wanted to build a non-custodial experience that would be highly secure, that could work really at scale, super simple for billions of users to use someday. We have hundreds of $1 million in wallet. It comes in the shape of an iPhone and Android app. And we have users with 10K, and largest wallet was $500 million. So it's very secure for small or large wallets.
Great to be in London after 2.5 years. So great to be here. I hope everybody's loving this in-person experience again versus Zoom. Alex Mashinsky, Celsius Network. I think we invented this thing of yield, right? The whole idea of paying yield. 28 billion under management, 1.1 million customers. We're cranking it up, right? Going to a billion users, right? So that's what this is all about.
Fantastic. So I'll ask a stupid question, but I'm guessing everybody's interested. What do you think about the price rally right now? Where is it coming from? I know it's a stupid question, but...
Yeah, look, I mean, we actually were, I'll give you the technicals and the fundamentals, right, since I do both. From a technical perspective, you can actually look at the charts. It's very simple. The consolidation pattern looks like a pennant. That's very standard, extremely bullish phase when, especially in crypto, which is a little bit different, but basically what it says is you've got this tension between profit taking and strong hands coming in, and we just came out of that multi-week, actually multi-month, kind of pennant flag pattern this week. The crypto fundamentals are obviously everything's driven by Bitcoin right now still, 21 million Bitcoin, and we are in what we call a massive supply shock in terms of fundamentals, which means that the amount of Bitcoin which has been leaving the exchanges has with the exception of a small time frame in late May, early June, has more or less continued unabated since last summer, meaning summer of 20. And there's just not enough Bitcoin to go around. And I think that the stock-to-flow model that everybody's looking at is going to break down next year, and we're not going to have even the same pullbacks like we did before, and it's going to be a very different time going forward for at least the top 2 or 3 cryptocurrencies. We'll see what the shakeout looks like for the rest, but it's going to be super exciting. Still expect a lot of volatility because of all the leverage, but it's going to be a super exciting few months for crypto, for sure.
Itamar, what's your take?
I like the optimism. That's good. Fundamental analysis is that you need ETH to buy NFTs. There are a lot of JPEGs out there to buy, and that means we need to buy a lot of ETH.
So the bottom line is keep making JPEGs and everything will be fine.
Save
exactly.
as,
Don't keep making JPEGs.
Alex, what do you think?
Well, just a few weeks ago, to remind everybody, we were at 29,000, and there were a bunch of pundits on different stages telling you we're going to 15,000 and maybe even 10,000. So it just shows you how quickly now everybody's like, oh, we're going to 100,000 or 300, no, 1 million, right? So I think the market already priced in ETFs, and the market already priced in settlements or Gensler and everything else kind of cleaning out by the end of October. And that's just a little bit irrational exuberance, right? So I think, and I've been tweeting about that, about us revisiting 29,000 a few months ago. No, I got a lot of hate at Twitter for that. I think I said 29,056. We hit 29,256. That was the low. Right now, we are going to stay in this level, 55 to 63,000. A lot of resistance there. A lot of people who bought coins at these prices who are going to be selling them because they feel that this is their chance to recoup their money back, right? So I think we're going to, if we can break it on high volume, we're going to see new highs. We're going to hit 100,000 before the end of the year. But I would say it's 50-50 if we're going higher or if we're going lower.
So I'll summarize this amazing panel opinion. We have no idea. Okay, great.
It's not that we don't have idea. I have an exact idea. I'm
It's
telling
50-50,
you.
yeah.
Watch this. No, I said we're going to be at that range for a few weeks, and we're going to test if you have high volume. You have to watch the volume, not the price. If the volume is high, that means you're going higher. If the volume is low, if you go to 63,000 and you're seeing low volume, we're not going to stay there. We're going to break down. Okay? It's very clear.
And how do you guys,
By the way, I don't know, but I think we should, there's an unbelievably cute newborn in the second row right there who's been watching intently since we got on stage. I think we should ask her because we may get a clearer answer.
Yeah, I definitely think newborns are better.
And by the
than
way,
hamsters.
in 25 years of doing conferences, I have never seen that. It is well done. Seriously, well done.
So where do you think it's going? If assuming we're all optimistic, because everybody here is optimistic, otherwise we would have chosen a different vertical to work in. Where do you think it's going in terms of the yield that the platforms are able to perform if you compare it to the regular market? Alex, let's start with you this time.
So we paid $860 million in yield. Okay? If you look at Barclays or Lloyd's, they didn't pay that much money to their customers this year. Okay? So little Celsius is paying more yield than some of the largest banks. It's not because we're so good. It's because they don't pay any yield. Right? So how many people in the world are going to say, yep, I want more yield? Right? Basically, every person on the planet, if they have any sense in their head, they're going to say, you know what? We're going to take 10% or 20% of my money and move it over, right? So the first killer app, store of value, right? Bitcoin, Ethereum, store of value. Second killer app, yield. That's 8 billion people that want that, right? The question is how long it's going to take for us to create enough trust deposits, not money deposits, because that comes first. Trust deposit first, then money deposit second. The yield itself, like we're paying 8.8% on stablecoin, has nothing to do with whatever you think yield creates that yield. 8.8% tells you how much money is missing in DeFi, CeFi, and so on, right? If it was 4%, that means half of that as much money is missing, right? So the yield indicates the demand for stablecoin or the demand for Bitcoin, and you should watch that very carefully, right? You see us lowering yield, that tells you the demand for stablecoin is going down, or the missing amount of stablecoin is going down. You see yield going up, that tells you that Bitcoin is going up, because in most cases, people are borrowing USDC, USDT to buy more Bitcoin. So all these things are actually leading indicators into what's happening. And again, we have a community of 1.1 million people. I'm not telling you what's happening. The community is telling you what's happening. I'm just a mouthpiece talking on their behalf.
So Bill, if we compare the billions using the regular banking systems and the millions who are using these platforms and getting this yield, do you think, if we refer to what Alex just said, that this huge interest or yield that you're able to pay really reflects this gap between millions and billions of users, and where do you see it going?
Well, our world, independent of that fact that Alex has done a great job paying more yield than the banks, our world is a round-off error in terms of the number of people involved. That's the big problem, right? So if we get 1 billion people via the banking system, where the banks basically start using, right, our shared lending practices to generate yield, the yields are going to come down. It's just common sense. And so our advantage, I think our shared advantage is we're still going to probably pay more of it back to the consumers than the banks will. But on the back end, where we're doing the lending, right, the demand is not going to go up commensurate with the amount of money coming in. So that remains to be seen, in my opinion, what happens when the banking system comes in. And they will. But it'll probably take 5 to 10 years. Just because of the regulatory overhang, the questions of, what's a security, what's not a security, et cetera, et cetera. But, it's the last bastion of the internet that hasn't been disrupted by, the internet itself, right, is banking and money. And at some point, the banks will either die or do it. Some of them will actually die. Some of them will try to buy their way in. I actually predict there's companies in our space that will start buying banks. I predict the opposite will happen. You'll probably see exchanges start looking to get permission to buy banks. Maybe not in the US where the regulators won't allow it, but in other countries for sure.
Itamar, how do you see it? I mean, your model is slightly different. You're not actually lending the money out, right? You're connected to different mechanisms in the ecosystem. How do you see it evolving from your side of the business, and if you want to maybe elaborate a bit more about the difference?
Yeah, our model is different as we are fully non-custodial, permissionless, so it's really full access to DeFi, and so we have more optionalities for users. What we observe now, because obviously it's a bull market, so it's actually yield on ETH that people are seeking. So we had waves of a lot of volume in the past on protocol like Aave or Compound. Right now, what we see is staking. So we could give yield around 5%. If you go on more complex DeFi product, you could even get to 7-8%. Staking is I would say, sustainable mechanic, but as more volume goes in, it will decrease, exactly like you mentioned for lending, but it will take more time. You can have a lot more validators before it decreases. And then higher yield is often subsidized. So in DeFi, you have all these protocols that launch, subsidized, so yield farming, whatever you call it. I would say that will stay for a long time, actually, because this notion of launching a new protocol, a new product, giving ownership to the community of that product means that you bootstrap new products, and there will be many more in the coming years. So I think it's artificial in some way because it's a subsidy, but there will always be new projects ready to subsidize their early growth.
Just interested to see in the crowd, how many of you use yield farming or are interacting with it? All right, pretty impressive. Oh. How many of you are using yield apps like Abra and Celsius? Okay, so a fair amount. How many of you are doing both?
Wow,
fantastic.
I have one more question. How many of you planning to use a bank to either store or buy or store your Bitcoin or for stable coins?
Wow, so many? I'm surprised.
So many,
why?
right?
Why? Why would you?
Security, take them out.
So what's your
There's a therapy lounge right out there for you.
What's your take about the recent evolution in the US?
Evolution?
Well,
if I call it
exactly. Yeah, it's a bad definition. About the recent events in the US.
Mass psychosis? I don't know. I mean,
with regards to their approach to your businesses.
I bought a one-way ticket to London. So.
Yeah, exactly. Look, I'm sure Alex has a strong opinion on this too.
Alex always has strong
Yeah,
opinions.
we're all in this. In
50-50.
Yeah, exactly. Whether we go to jail or not. So, look, I think that there's a lot more clarity in the US than people think there is in most areas, right? If you're holding crypto on behalf of someone else, a consumer in particular, that is a licensed requiring activity in almost every US state, the big exception being California. And in most cases, that's regulated via money transmission laws. If you are doing derivatives on cryptocurrencies that are considered commodities in the United States, that is a licensed requiring activity. You generally buy the CFTC, which is the sister organization to the SEC. And we all know what the implications are if you're doing things like security tokens. So it's not like there's a huge surprise. I think the biggest question right now in most people's minds are, is there there's areas where people aren't sure if something's a security or not. Mm-hmm. But that's been a question for lots of businesses over the decades. In some cases, the regulators have decided. In some cases, the courts have decided. and we'll see if certain other companies' lending practices. We actually don't issue. We issue Abra earn accounts through a bank trust. So I think we operate differently, but I think there's some overhang in that area of what's a security. But other than that, there is a lot of clarity out there, particularly in the U.S. and more than I think most people, especially the media, who are constantly asking me this question, who actually they've done no homework, so they actually don't know.
I never do my homework.
We are overseen by 65 regulators in the United States alone, us and our bank partners, of course. But that's a lot of regulators.
Itamar, how do you see it affecting, if at all, your platform? I mean, you're not actually in possession of anyone's funds. You can.
So we are in a really good place right now. If you look at UK regulation, we are just a software company. We give you an app, you deal with it. We have no regulatory impact. Overall, I would say better to have clarity on regulation, even if it's not perfect, than gray area where every year we are waiting for the new paper to see our non-custodial wallet in it. I think we have a few years ahead. I don't know how they will figure out a way to regulate non-custodial services. It's very tricky from a technical perspective, and so we have a few years, and we really enjoy being a non-regulated business. So.
Always fun. So, Alex, how do you see the evolution of this segment of the market with the evolution of the market, or in layman words, when can I start staking my NFTs?
Well, so I think I was in Token at, was it 2048, I think in Hong Kong, right? We were talking about that in 2018. We filed with the SEC voluntarily in 2018. I think we were the first crypto company to do that. Everybody else was going like, Mashinsky, you're crazy, you're gonna wake up the bear. Why are you filing with the SEC? Well, we haven't received any letters from them since, right? Because regulators want to know what you're doing, how you're doing it, why you're doing it, and so on. So the more communication you have with them, the better. Same thing in the UK, right? Same thing with FinCEN and all the other agencies that Bill was talking about. So look, I don't think there is enough clarity. There's some clarity, but there's not enough clarity. And everybody around the world is waiting for the SEC to wake up and tell us what the rules are, right? So I don't think the SEC is trying to squash crypto or slow down crypto or anything like that. I think they're right now collecting a lot of information from a lot of companies. They want to show who are the bad actors. They're telling you very clearly, we're suing these guys, we're suing these guys, and they're going to show you who are the good actors, right? So, and when those two are kind of clearly determined, all the companies, all the crypto companies, doesn't matter if you are calling yourself DeFi or CeFi or AnyFi, you're going to have to choose which camp you're going to belong to, right? Because Uniswap didn't think, Uniswap thought they were just a software company. And they got a subpoena from the SEC, right? Saying, hey, come over here.
First of all, if you can get a subpoena from the SEC, you're not really DeFi. Because they have somewhere to send a subpoena.
I understand. It doesn't matter. The point is the regulator doesn't care what you call yourself.
Exactly. That's
right.
Exactly.
So go completely DAO, don't have an address.
No, well, that's not the point. The point is that what I'm trying to say is that there is no conflict between being, and I think you're saying the same thing. There's no conflict between being fully compliant and being a crypto company.
Of course.
And if you guys are planning to do a project or anything else, don't try to pretend like the laws don't apply to you, or you're going to put yourself in some jurisdiction that has coconuts, and because of that, nobody can come after you.
Don't badmouth coconuts, though.
Huh?
Don't badmouth coconuts.
No, it's, I'm talking about a specific company that thought that was a winning strategy,
So, back to my question.
50-50.
When can people start actually doing something with their NFTs instead of right-click save as for JPEGs? When the
industry always moves faster than regulators, always.
Yeah, but I'm not asking about the regulators. I'm asking about the platforms. Like, when can we start using the value that is kind of stuck in the NFTs?
There are lending platforms that will let you use NFTs as collateral now. The question is just, look, a prime broker will traditionally take a yacht, a mansion, what's the cartoon? I own a villa, a mansion, and a yacht. They'll take all of those things as collateral. Today, they won't take crypto,
Of course.
which is more liquid than any of those
Any
things.
of those.
Which doesn't make a lot of sense to me, but that's banking. Doesn't make a lot of sense. The equivalent is already happening with NFTs. There are sites now that have figured out how to price certain cryptocurrencies, certain NFTs, and as a result, I'm guessing the LTVs are pretty low. I haven't really gone into detail. If it's not, they're crazy. But they will take them as collateral for loans, and it's coming. We would love to do it if we could figure out how to accurately price it, because we don't know what the risk is yet. And a lot of the NFTs, it's actually, in all fairness, it's the opposite of what you said before. It's not like, NFTs are creating demand for Ethereum. As the price goes up, people perceive funny money to spend, and a lot of the overhang right now is going to NFTs, just like it went to ICOs 5 years ago.
Totally agree.
Yeah, and it's
It was not the serious
just common
prediction.
sense. It's
Yeah.
not like we're bringing art collectors into crypto right now. These are crypto people getting into art collecting.
A lot of disposable crypto income.
100%.
Yeah.
I would say these are crypto people practicing flipping.
Yes.
They're not collecting,
Well.
okay? The duration of holding on NFTs has decreased, not increased, over the last few weeks. So I think, look, we are, it's the opposite of what we recommend, right? So our strategy from day one has been, if you're a long-term thinker, you're thinking these coins are going to go up, then don't spend them. Don't buy anything with them. Borrow against them, right? Earn yield on it. Because anyone here happy with any Bitcoin they've ever spent on anything? Anyone here? Anyone here would like to reverse all those transactions and just borrow against the asset? Right? So these are really simple assumptions. If you're really in this room and you believe in Bitcoin or you believe in Ethereum, then why are you spending it? It's that simple.
So all NFT buyers are not flippers. I mean, you have.
I didn't say all.
Owning a CryptoPunk is really owning a piece of history for many people.
I have a
think
dozen
there's
of them,
really-
yeah.
But the same way that a lot.
What did you buy them with, fiat or crypto?
Yeah, that's a good.
This
put you
is
on the spot.
punks are not about. It's not about relative to Bitcoin, right? It's
Why?
about
It's an asset. I'll challenge you. It's an asset that it's, the liquidity might differ. The value is, not exactly something that you can actually measure. How many people here have like NFTs? Not like $2 NFTs. Okay, not so many. Okay. And did you buy it with fiat or crypto? Who bought it with crypto? Okay. So
it's very hard to buy it with fiat, right?
Yeah,
Of
very
course, of course.
It's the
We're
whole
working on it,
supply
but-
chain is designed for ETH or for stable coins, right? So it's not a. But look again, it's a $2.5 trillion asset class. It's not about NFTs. Okay, NFTs is like the sideshow. The next $2 trillion are going to be mostly the top 10 or 15 coins, right? That's where the increase in value is going to come from. So today, a lot of people thinking, I'm going to jump from this bus to this bus because this bus goes a little bit faster, and then I'm going to jump back on the other train because
That's the
that
meaning
train
of trading.
has less stops.
That's the meaning of trading. That's
No,
what
okay?
traders do.
When you calculate how many fees, let me put it in a different perspective, okay? Coinbase, the tiny Coinbase compared to NASDAQ and the New York Stock Exchange makes more money than the NASDAQ and the New York Stock Exchange put together. And that's because all of you guys are feeding them, doing transactions back and forth, back and forth, back and forth. Now, if you hodled, all of that money would still be coins in your wallet. More coins, take a loan, dollar loan, spend the dollars, don't spell the coins, don't trade. Everybody thought they were smart. Meanwhile, Bitcoin overnight went up 11%. You woke up, how'd you feel that morning when Bitcoin went up 11%? Like a genius or like an idiot? So that's what I'm talking about. Just stop trading. Hodl.
So should people hodl their NFTs now as well?
50-50.
Amazing. I love it. So looking even more into the future, into the metaverse that has recently, became something more of a topic to discuss. How do you see it evolving into that? And again, as you said, Bill, like the actual problem with NFTs is how do you price them? Anybody here maybe working on pricing NFTs? Like, all right, I think that's interesting.
Yeah.
There's a DAO actually that is pricing NFTs on independent data sources. So just like
Based on supply and demand.
yeah, just like Chainlink. The problem is that I know a lot of people, because I've seen it with too many punks, that sell the same punk to each other just to move up the price, and they hope that some idiot is going to come and give them their ETH for a price that is 5 times the real price. So we don't want that, right? We want a market that is real, a market that represents true value, stability, right? I think it's good for all of us. And when people get burned, all we do is we're sending one more customer back to the banking system. Every time we burn a customer because they were over-leveraged, or we sold them a shit coin, or they overpaid for a punk, all we're doing is losing another customer in this revolution. Now, if you think that crypto already won the war, let me tell you, China right now, the digital yuan has more customers than all of crypto put together. About 12% of all Chinese people already have a digital wallet using digital yuan. And they have embedded 1.4 billion customers. So just because on the internet era we won with the open source platform doesn't mean this time it's going to happen again. If we keep losing customers, keep losing followers, we're going to lose. All of our coins are going to be worth nothing. That's what's at stake. It's not like a little thing. So instead of everybody's trying to make money, a little bit of money on somebody else, let's bring the next billion people into crypto. That's what the target should be for all of us.
I don't think the making money in the long term is really going to matter that much. I mean, obviously it's great today, and I agree that yield has become a killer app for crypto. But look, this is the fastest growing technology adoption in human history. Period. Full stop. Nothing from a macro perspective. I was traveling to 50 countries my Netscape days, building Internet 1.0, didn't sleep. The more I didn't sleep, the more money we made. It was directly proportional. That's how crazy it was. This is growing faster. And you're going to see the tokenization of everything. What we're calling the metaverse right now, we barely know what we're talking about. And it's going to evolve to integrate the next generation of AR and VR and gaming and banking. Not to mention institutions in a way that we haven't even figured out yet, that MIT engineers are working on now. And so the next 10 years is going to be the application layer on top of a lot of these protocols that we just haven't even seen yet. And and I agree, it's not about trading. It's going to be about, basically making, right, these protocols work for us as
So elaborate
society.
a bit more about how do you see it, like more try to picture the vision of how do you see it evolving, like from now. How would the next billion people join?
Oof, I mean, it's to me, it's everything from games to the new type of banks, which is what we're building, to digital media collections. To me, the NFTs is a big global game. That's how I look at it, right? It's just a game that actually uses like something that has real, tangible, fungible value in order to price it, and it's just an example of where this is all going. Entertainment is going to be integrated into this world, right? I wouldn't be surprised if we have kind of token-based pay-per-view kind of applications that go into developing markets that can't pay a $10 subscription to Netflix, right? But in the aggregate, that may mean more money. So when we took money from Foxconn a few years ago, I was on the board. I don't know if Julian's here again. Julian Hardy, who's chairman of the new foundation that we're a partner with. He ran an IoT company that was basically providing the solar lanterns into homes in Africa, which had cellular connectivity, so they use M-Pesa to pay for the lights. And you make the payment via M-Pesa, your lights go on. You don't, the lights don't go on. And this now is used in millions of homes in rural Africa. And in some cases, it's the first electricity they've ever had. So the reason this worked in Kenya and the surrounding countries was they had that payment vehicle. There's places all over the world where they want to do this, but they can't because there's no way to pay.
Yep.
Right? And I think that the Internet of Money is that for the 2 billion people that aren't reaping the benefits of this new economy today. And that's what's exciting to me. That's when I think of the future of banking and tokenization of these things, getting them access to entertainment, to gaming, to schooling, to the basics of water and electricity, and having the ability to pay so that it's not the government doing this, but budding entrepreneurs, which I would definitely trust more than local corrupt governments, is super exciting to me.
To add on, I think also you mentioned, I think 10 years. I think things are getting much closer than, I think 3 years ago I would have said it might take 10, 20 years. If you look at what's missing, I think the first, obviously we are not super objective on that, but it's the story of the web all over again. It's the new layer on the web. So it's all about being open and permissionless, meaning you will have way more innovation on a permissionless network than you would have on a permission network. And that's why you need wallets that are non-custodial so people can access any service they want and not have a gatekeeper who can decide. But today, or in the past few years, I would have told any new users, go on Coinbase or go on Celsius, you cannot custody your fund yourself. And that's why, there will never be a future where we have a global financial system where 1 billion people or more have some kind of secret, whether it's a password or a seed phrase, and if I have your secret, I have all your money. And if you lost your secret, sorry, you lost all your savings. That won't happen. And that's really what we were obsessed about for the past few years at Argent. But now the next phase of the problem is, okay, we have something secure, simple, and it costs $50 to take any action. So again, we're back to you should use Celsius. I believe it's you don't have gas fees. Everything is smooth. But the technology is coming now. You have, I'm sure in the room, people like Starkware, you have zkSync. Roll-up solution on top of Ethereum are there today. And they will evolve in the next 6 to 9 months to be the full-fledged solution. But suddenly you have experience that can be super secure, where you have the safety net in non-custodial that you would have with your bank or with a custodian. You have no super low cost and scale. I'm not sure we'll be able to get $1 billion in the next year, 1 billion people in next year, but we are getting there. And then you have permissionless, suddenly innovation is coming. And so anyone with a phone in any city, in any village, can suddenly have access to that same financial system. So I give it a year or two, not 10 years. Yeah, I think the foundation will be there. Then we need to build use cases. How about remittance for some markets? We might need to use stable accounts, but the building blocks are there.
Alex?
I hope that that's what we're going to happen. But I did voice over IP, right? 30 years, almost the anniversary in a few months. Just over half of the population is using voice over IP. You would say, wait a second, it's for free. Why wouldn't 8 billion people use it? 30 years, just over 50%. Here we're talking about all the money in the world, right? So this is not just about somebody opening a wallet. It's about somebody opening a wallet and then moving all their money over. Just because I have a wallet with $100 on it doesn't mean that I moved over from the banking system. So my point is it's going to take much longer than we think because what the fight is over is all the money in the world. And that's what's going to take a very long period of time. So we may have 8 billion wallets, but we may have only 1% of the total AUM, and we're going to be fighting over, again, trust. The fight is over trust. Trust for security, trust for execution, trust for storage, and so on and so on. That's going to take a very long time. The banking system has 700 years head start against us. 700 years since the Medicis in Italy, right? So that's what we're fighting over.
So it will take time to have all the money of the world, but for me the fight is over making it useful. Today crypto is not solving problems for many people.
You can take a loan, you can earn yield, you can use a credit card. What else do you need?
It's not solving new problems. It's things that we're solving people for relatively rich people. It's a new investment class, they make a lot of money, it's great. We're not really, let's be honest. And
we have an event tomorrow. We have an event here on Saturday. Come meet the Celsians. Every one of them will tell you a story how they changed their life, not just didn't solve a problem. It changed their lives.
Because you can make life-changing money the same way that people who buy an NFT and we see people who make designers who earn $20,000 a year that suddenly make $300,000 in 1 week. It's great.
More than changing. So when you see a light at the end of the tunnel, when you know that you have a path towards financial independence, when you know you can pay your bills, it's not about becoming a millionaire. It's about knowing that you have your path. Because most people today, this baby over there, doesn't have that path. Because, again, you can work 2 jobs and you're not going to be able to afford a home.
Moving from 2% yield to 5% will not give you that path.
Well, that's why it's 8.8, you know? With 8.8%, you can. That's the whole point.
And we know that in bear market, it will be 0.5 or 1
actually,
or
it was
2.
12% during the bear market. So
But,
look,
but
the point is,
Alex, over time it will decrease, as you said earlier.
that's
because
what
there
people
will be
look.
more money
I
coming in.
invented this. Okay, so I'm telling you that for 4 years,
What, yield or
Celsius was the first company to offer yield, still offering more yield than anybody else. Our rate started at 4.5%, went up all the way to 12. Now it's 8.8. So my point is, everybody along the way told me how it's going to go down. Because, well, now you have 25 million. Wait until you have a billion. Okay, we got a billion.
Earlier,
Wait until you have 10 billion. Well, we got 10 billion.
The average person doesn't have money to put in savings. They simply do not have money to put in savings. The average person, even in a country like the US.
Yes, I agree with that. That's because their credit cards are eating them alive, charging people 24%.
So, Alex,
So you have to change your behavior. You have to get rid of your debt, and then you have to start saving. You don't start saving while you're paying 24% to your bank. That's lunacy.
So let's get back to the question, as Bill said. How do we bring the next billion people? Again, should it be artists?
Voice of IP. No, just kidding.
Well, I think
50%.
to me, it's the marriage and the democratization of what's happening in the West with developing markets, right? And this has been an unbelievably successful test for us. We have almost 2 million registered users now, and we have people with 8 figures of dollars in their Abra accounts, and we have poor farmers in the Philippines, Guatemala, Ecuador with $10 in their account. And I answer a lot of questions, my team does, I actually do it myself sometimes at night on the weekends, from customers on Twitter. And it's not the people with 8 figures sending me questions on Twitter, it's the people in the Philippines, in like I said, India. You know, we have Indians in Dubai using Abra to store money and then using stablecoins to send money to India, and then cashing out through our cash teller networks. They're not using bank wires like our wealthy users. It's the same exact app. I've never seen any, outside of the web itself and WhatsApp, right, which are communications and information retrieval tools, I've never seen anything like it. And this is what drives me at this point, is that democratization of something in the financial system that the banks have no incentive, none, to work on. They're disincentivized. It costs so much money to onboard a consumer in the Philippines in the banking system. They don't want a $5 deposit. It's not like, oh, we can't afford to take it. They literally don't want it, because if you call them, they've lost money on you.
Yeah.
Right? And so, you know, I think that's how we get to $1 billion, to answer your question, is to keep pushing the envelope on the little guy who is and gal who is out of the financial system today, but sees that, you know, in this global movement towards decentralization, which is what we've been on since the PC and the internet and the smartphone, that this is the phase of that where I can actually store money, I can put my money to work, I can send money, and I don't have to trust the government and the banks necessarily, who didn't want me in the first place.
Yeah.
When we
Go.
when we hit that $29,256, just over 1 million customers, 1 million people who were long on exchanges, right? Leveraged long, got liquidated. How many of those people do you think are still in crypto? So I agree with everything Bill is saying. We need to get new customers. But if you keep bleeding millions of people on the back end, people keep falling off your bus, how are you going to get there? So aren't we going to get there much faster if we stop bleeding? So the funny thing is that you know who's shutting all that down? The regulators. The SEC is the one who forced FTX and Coinbase to stop offering 100x leverage. It wasn't me or you, right? We still consume those products for no reason. So we, again, this goes back to, you know, again, I've seen this movie with Voice of IP. Bill has seen it with, you know, all the stuff that he was working on during the same period of time. So we're telling you that this is not a fait accompli that we're going to win automatically, okay? And if every one of us doesn't bring 10 people and educate them about saving and educate them about not taking leverage and about yield and about how to be, just how to have good habits, right? And not bad habits, we're just not going to get there. It's that simple.
And now that you don't need, it's not a use case that will bring $1 billion. It's really a 1,000 use case, each bringing $1 million. You can have Celsius in yield, maybe you will bring 100 million or hopefully $1 billion by yourself. Gaming, a good game, easily 10 to 100 million.
Probably more,
and then remittance. another 100 million. That's how you'll get there. That's the beauty. Anyone can build an app, and you will have a few of them that will bring few million users, and that's how we grow to 1 billion.
And how do you see Argent in that? Because
50% of it.
50-50. But how do you see it? I mean, again, to my experience, it's a bit more for advanced users.
So Argent started as, we wanted to be Revolut without the bank. It was super simple. You wouldn't see gas, you wouldn't see anything. There's no difference between staking or getting yield in Argent than in a centralized platform or in Revolut. And then what happened is gas started increasing slightly. And so we realized a user with $100 or $500 would be pissed because it's $50 to remove your savings. And so we refocused on much more advanced users. And that's why we have these wallets with $1 million+ in wallet. And that's why it became much more advanced. Then now what's happening, and we are rolling that out as we speak, in a few weeks, we'll be live on layer 2, where suddenly we're reducing costs by 98%. So it's suddenly 10 cents, 20 cents instead of $50 to $100 for this transaction. So now we can go back to users who on-ramp directly to layer 2. They can have yield on ETH, on stablecoin. They will be able to trade. It's affordable, and it will get cheaper over time. And now we can go back to hiding all that complexity. It's not a technical challenge anymore. The big technical challenge have been solved. Now we have to go back to the roots and really making this super simple for users.
Okay, you want to take some questions from the audience? Anybody has questions?
Hello. Hi, as Alex said, security is perhaps the most important hurdle to pass. And yesterday, Bill said that Abra is the safest way to earn yield, which implies suboptimal practices by others in the space. I'm curious what those are, and as a follow-up question, do you think the yields reflect the risks, or is there a security arbitrage that you see?
Yeah. So when I say that we're the safest place to earn yield today, it's relative to the fact that I know we're doing everything possible from a risk management perspective that we can possibly think of, right? So. I think I'm the only person in the space who was a cryptographer for a large 3-letter agency, and also ran a fixed income portfolio at Goldman Sachs as a quant. And so, being able to deal with both worlds is very, very hard. And so we really have spent a lot of time, money, and testing, building, I think, a risk management business within Abra that is fantastic and the best in the space. And so, we've foregone a lot of opportunities, right? When everybody in the yield space was chasing the arb play on Grayscale, the Grayscale, I explicitly told my team, this is speculation, right? You're already taking speculative risk holding crypto. That's not the purpose of yield, right? And so I think at least I'm not going to speak for everyone else in the space, but that's the perspective that we've had since before we even launched the product. And we spent, I don't know, a couple of years working with our bank partner. We could have launched the product much, much sooner, right, using our trading partners under money transmission licenses, and we explicitly chose not to do that. And we delayed the launch for quite a while, working with banking partners and lawyers to basically work through the compliance processes for doing it that way, while we were also extending the risk management capabilities of the company. And there's a lot of people in our space that simply don't know the questions to ask from a risk management perspective. And I see resumes all the time, from people in the space. And when I dig in, they just don't know. And I think it's going to take a concerted effort. And it's just my opinion. I don't work for all these other companies, so I don't know what the practices are. But I think it's going to take a concerted multi-year effort to put the right risk management practices across the entire industry. And we're trying our best to do our parts to be, at least a single steward of that.
Alex?
I think we have a question over there. Yeah. So we have the biggest target on our back, right? 28 billion. I can tell you every hacker in the world is saying, oh, let me just go and hack Celsius, They have the most money. If you get into our accounts, you're not going to find any coins there because our business is to lend them out. So the risk is not protecting. Of course, it's great to protect and have the most security. I can tell you we have the safest wallet, right? Everybody can just say that. The question is, how many times did you get hacked? And do you still have all the coins that were given to you, right? So I can tell you that we lend out. We have hundreds of thousands of loans, right, with institutions. The risk is not, can you keep them safe in your wallet? The risk is, are these institutions or exchanges or DeFi going to return those coins to you? The counterparty risk is the risk, right? And Celsius had 0 in 4 years, longer than anyone else. No one here has done it for 4 years. Zero institutional, basically situations where they either didn't return the coins, did not pay the interest, or had any kind of default. We had thousands of margin calls where they had to give us more money or give us more collateral, but 0 defaults, right? And again, we show that. We give all that information. We have what's called proof of community, where you can go into the blockchain and verify everything I'm saying by yourself, even if you're not a Celsius customer. You can go in, all the data is public, and you can see all the transactions. I'm not going to tell you who the counterparties are, but you can see all the transactions and verify everything I'm saying. So your bank is never going to give you that, right? Try to go to your bank and say, I want to know what you're using my deposits for. I want to know who you're lending them to. Did they return the money? And I want to know if I'm earning. I'm 1% of the pool. I want to know if I'm earning the same thing like Alex or somebody else, right? That's the transparency that we need to have in this industry.
And I would say we have the smallest target on our back. We cannot, we cannot take your money. We cannot freeze your money. A bad actor, a government cannot force us to freeze your funds, while they can with most people on this stage. And it's really, for us, I think long-term users will probably not care. But it's about can't be evil versus don't be evil. And that means we can innovate, we can move super fast. We are not sitting on billions of dollars of money, where every action, it's all about the process, internal review. In our case, the code is on the blockchain. Once it's there, we can't tamper with it. We can't even upgrade your wallet. And that's really, that's been our approach.
Okay, we have 50 seconds. I don't think we can actually make another question.
Make a statement.
50-50. Thank you very much. Thank you guys. It's been a great panel. Thanks, everyone.
Thanks. Good job.